Greetings, Dr. Jeffrey Scott here, and I am on the road again. One more week of travel, and then get to coast into the end of the year, and hopefully, um, either next weekend or the following week, we'll do one of those Saturday morning seminars. I'll let you know in the top-down trader which is going to be chosen. Those that are new, it's usually 10 to 1 on a Saturday, and I go through a lot of information, what um, information supports how I trade and what I do. Markets drifted on Friday. I think some of the indexes were higher, most of the stocks were lower. Clearly, we're starting to wait for Powell and the Fed meeting. Again, this is December 6th. My email is marketmripro@gmail.com. My Google group is Top Down Trader. My website is marketmripro.com. I usually use a lot of the trading app on these broadcasts. I'll try and integrate more of the Metastock tool. They're very different tools, and I think they are supportive of each other. The Metastock is the only tool that I have that has data from India, Australia, and other places. I know for Australia, you can actually look down into the sectors because they have the stocks by sectors, which is very exciting. I believe the same is for India. Um, and also the trend breaks in the scans is something different there. And it streams. So there's a lot of reasons to like the Metastock. And those of you that bought the Metastock that are watching this, I'll show you the part that I'm trying to bring to Metastock. It's just requiring a little bit of programming effort when we have time. So welcome, and let's get going. As always, these sessions are for educational purposes only. Anything I recommend in the spirit of education should never be considered investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You're solely responsible for any investment decisions you make. I may own or buy, sell any stock mentioned in the report. Trading stocks and options should be considered risky. You should always consult with your financial advisors before making trades. And as you know, I've got tools on multiple platforms. If you're looking for the wealth chart video, again, one of the tools that I have on my platform, I will be doing a video before the market opens on Monday, assuming I'll have time. I should. My Google group is called Top Down Trader. It's free. It's what I use for a mailing list. Every time I put a video up, if I want to invite people to a live seminar, and the ones I do online have always been free, and I get great reviews. Just go to Google Groups, sign in, go to all groups, look for Top Down Trader, and let us know how you want to be contacted. And just as easy as you sign up, you can unsign as well. The Leaders Index, which is a group of leading stocks that we chose together at the October meeting, still is holding. It's really not doing much here, but it's holding above the 50. And as long as it stays above the 50, I'm going to keep looking at it. Why do I watch it? Because we expect this to break down even before the major markets do. Is there a recession in our near future? Well, look, there's always a recession in our future. The question is, how long? And I'm in that camp of late first quarter, second quarter of 2026, when we probably see the Fed's behind on cutting, which is what always happens, and where perhaps some of the impact of the tariffs come through, and we'll have slowing growth and more inflation. And nobody likes stagflation. Been there, done that. Hard to make money in the stock market, at least being long. You could see that the 10 minus 3 month, the 10 minus 2 year yield curve dipped below the zero line, crossed above, and it's that crossing above that triggers the watch to get the recession. Those thick gray bars are recessions, and every time we've come below and crossed above, you get one. We don't see any evidence of credit tightness down here, so it doesn't seem like it's imminent. And the Philadelphia Fed diffusion was minus 1.7. That one is up to date through November 20th. It'll be another week or two before we see it again for December. Recessions usually start from minus 20, so it's good to see we're above that. Will the Fed disappoint? I mean, that's the magic question. Right now, there are 86.2% are looking for a cut at the December meeting, another 25 basis points. It's clearly, I think, baked into the market as we're approaching all-time highs. And every time somebody hints that they may not cut, or a data piece comes out that looks stronger than expected, the market sells off. I think they're going to cut. I don't think Powell wants to disappoint the markets as we go into the year end, especially, as I said, with the risk of a recession and slowing economy. Know your news and earnings. Nothing on Monday. That's good. From news, Tuesday I got the NFIB optimism for November. Then a backwards looking jobs opening. Not sure that that's going to matter. A delayed employment cost. But then, more importantly, we have a FOMC interest rate meeting. We'll hear about the federal budget and the Powell press conference. On Thursday, we've got December 6th jobless claims. I expect that to move the market. And on Friday, we have more Fed speakers speaking as the blackout period ends with the Fed announcement. As you could see, we still have a pretty significant week of earnings. You know, the home builders probably go the way of long-term rates. And there's been some mixed reports there. Uh, I always like to watch Chewy, um, Oracle, Adobe, some of the big software players, Lululemon, obviously, and Costco on the retail side. So lots of earnings to come. As I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Let's take a look at the charts. And let's show you what I see. On Friday, the Qs closed up 0.41, the Diamond's up 0.2, the Spider's up 0.19, and we got to skip to the Russell down 0.42, and the dollar was down 0.11. Notice each of these was at the lower part of their closing range, which means they closed near the bottom of the day. Volatility was down, also closed near the bottom of the day, and Bitcoin was down again, and you could see from a 5-day perspective, ended the week lower, which I think continues to rattle the market some, although the Bitcoin recovery the prior 2 weeks was associated with a strong market. If we look at the NYSE, NASDAQ new highs and new lows, and at 12 months or 52 weeks, we can see we're nicely positive. If we come down here, blue is Friday, white is Thursday, green is Friday, white is Thursday. You could see the number of sectors positive and the number of industry groups positive went down across the board, except for in the NYSE, where the sector industry groups increased and the sectors were stable. If you look at participation, though, only 48% of the stocks in the S&P 1500, 39 in the NASDAQ, and 43 in the NYSE were up on the day. Over at the S&P sectors, you could see that the leading was communications up 1.16, and really the rest were we didn't show much. Now I just got a comment about these. I'll call Praveen when I get done. Um, these technology, discretionary materials, energy, and utilities all had splits. So not going to help us much looking at that. So I'll have Praveen make sure he updates the charts, and that will update this as well. On the categories, social media, Internet of Things, tech software, data centers, Chinese internet, retail were up, and to the downside, you could see uranium, blockchain, renewable energy, aerospace, and metals and mining. So markets up, kind of, breadth, not horrible, not great. If we look at the timing brief, you'll see no change. The dailies, just looking at the red and green below, green is a buy. So the dailies are all in a buy. If we look at the weeklies, which will be the intermediate term, the weeklies will show you they're in a buy as well. As you can see, weeklies in a buy. And if we wanted to look at the monthlies are in a buy. Hard for me to be short when the three time frames of my timing model are all saying be long. If we look at the US index ETFs, as we do most nights, and let's just take a look at the spider and see what we got. Major uptrend, trend line breakout, drifting higher, positive seasonality, not much volume. And I think that's been the story that we've had over the last couple of days. The markets, to me, certainly look like they want to move up to new highs. Um, you've got 50s as support, 100s as support, 200 as support. Even the 17 is in here. As long as we stay above those, it's a bull market and above the trend line breakout. This is the Qs. Yeah, I don't like the topping tail, but other than that, nothing really changed. If we look at the diamonds, similar story, bit of a topping tail. And here's all-time closing highs. We are so close. Do I see anything that bothers me? Anything different? No, no. Look at the 17, 50, 100, and 200 providing support if needed. Hopefully it won't be needed because I'm still long. If we look at the Russell, same story. Now the Russell, what's different is the Russell is really just below all-time highs. And on Thursday, set an all-time closing high. So very strong on the Russell. If we look at things that you don't necessarily want strong, one of them being volatility, we'll see that volatility was down, and we're getting into that level of resting that I've been looking for, with the VIX futures down another 2.35. And then the dollar has at a low enough range that I don't worry too much about it, but it was creeping up. It traded lower, bounced off the 50, and this looks bad from a, oh my God, the dollar is getting high. That doesn't look so bad. I think that's the dominant picture. Dollar's well off its prior highs. If I look at commodities, we know gold and silver have been animals. So gold has failed to break above the trend line on Friday, and gold at a topping tail was at minus 0.18% down. Silver was up 2.3. Oil is threatening to break above this trend line. That would be significant. And natural gas just blew through the trend line, but then reversed to close at the bottom of the bar, but still a big gap up. If you look at 10-year, unfortunately, it's creeping up. It was up another 0.71%. And if I look at 30-year, it actually took out the 200, up 0.53. So we're going to watch them creeping. Now, why would the rates be going up if the Fed's going to cut? Well, the Fed mostly influences the short end of the yield curve. And it's all about the smart money, the bondholders, the bond markets. If the bond markets like what the Fed does, then the bonds will probably go up in price and yields will come down. But if the Fed cuts and the bond markers think that inflation's a big problem, then those rates are likely to go higher as the price of bonds drop. At least that's how my medical mind understands things. On the buckets, no signal, neutral. On the market breadth, I put some lines on a week ago, and I talked about that this almost felt like we were getting a megaphone. And if that's the case, that's not a good sign. Uh, it's because that would imply that we're coming down here. And that would be a pretty significant drop from where we are. I don't love the topping tail and the fact that are struggling to break above here. So the more times we hit, the more times I got to wonder, are we really just setting up the higher prices in that megaphone, and are we going to come down? We'll see. The NASDAQ looks totally different. Doji bar on an up day. You can see the new high, stocks for the various levels, new highs have dropped some. The new high, new lows, positive, AD lines, negative, and then split on the up-down volume. and no new major signals. What I did like to see is the short-term overbought conditions that I called out a week ago when we were at 0.96 here on one day, I think. On the 13-week new high, new low have come down to neutral 0.77, 0.73, 0.72, and 0.81. So, we're in a good place to rise, but I think the markets probably are going to be range bound until the Fed speaks. I do think the Fed decision is binary. All right, if we look at the ratio charts to get a sense of what rotation is going on, that's not the ratio charts. And they'll probably be messed up by the splits too. Yeah, until we get the splits, I'm not going to talk much about the ratio charts here. All right, let's go into the top-down view of the JS layout. Go to top-down, and you could see the performance by rolled up stocks in the sector. So we're no longer dependent upon the ETF. So the leaders were tech, cyclical, and communications. Boy, that's a pretty tech-driven, high-growth board. What are the leaders on the industry side? They are travel, discount stores, apparel, some growth names, computer hardware, internet content, communications. Looks like internet content and information is there twice, so let's include software. We have 299 stocks there. Let's put on a $5 and $500,000 filter. And you can see we're left with 184. Let's rank them by, let's make pullbacks and uptrends. Filter there. Drops us to 41, and let's rank them by impulses. And look what we got. VSCO, big gap up. Probably, is it earnings? 12.5. So it was earnings. 46% growth. Big surprise. A little bit of growth on revenue. Negative surprise. Trades at a multiple of 5.5. Well, is this a stock that's a turnaround? Victoria's Secret. Retail is hot right now. Big move. VRNT. Customer Engagement Solutions Worldwide. I wonder if it's a takeover candidate. All right. It might be a combination of selling assets and potentially a takeover candidate. VIAV, this one I liked, but oh, what happened here? Where's my prices? That is bizarre. Gap up, flag, breaking out. You got a new CPR, volume breakout momentum, relative strength and OBV look good. Rubric, this one, big move up on earnings. Data security. This one I thought was interesting. I saw the chart. I got all excited. EchoStar breakout, sideways pullback, and major move. So here's the story on the major move. There was some stuff coming out about, I guess, Elon's, I think, his satellite company, and what that satellite company is going to be potentially valued at $800 billion. And SpaceX, EchoStar holds a ton of that. And if it gets repriced at that level, then EchoStar is way underpriced. Now, the problem is the rest of their assets, low-cost mobile phones, Dish Network, which losing members, those assets aren't doing so well. But if you just look at the value of that SpaceX stock, undervalued. One that I do own that this would be another interesting buy point is Reddit. Earnings are not out until February. It's going to be 97 cents versus 36. Think about that. It's 200% growth plus. Look at the growth it's had in earnings and revenue. Trades at a multiple of 60, so less than the growth rate. I liked how this thing moved up, has pulled back, had a trend line there, and looks like it wants to go higher. I'm out of it. I ran up much of this pole. Is it getting ready to run? Potentially. TJ Maxx, max for the minimum of TJ Maxx. Like much of the retail apparel is broken out and running. Ramp, probably want to find out what happened back here. Internet of Things, I like that one, I know, because it's on my buy list. And you can see how this one has had a big breakout, and it's got two momentum dots in a row. Interactive and Corp have to get above the 200. And Expedia, nice uptrend here. So, in summary, on the top down, growth is back with tech cyclical, which is discretionary, and communications, but heavily dominated by retail, apparel, discount stores, manufacturers, some of the non-growth names. So those are a couple of names. I think Reddit looks interesting here. Um, Victoria's Secret looks interesting here. And Internet of Things were the ones, three from this list that I probably liked the most. Now, what does that mean? It means that I might go into one of my models and start sticking these things in. So maybe, so Victoria's Secret was a VOSC, VSCO, and I like doing this because not only does it have the timing model, which I'm still testing in stocks, but it is a way for me to have these open up every day when I turn on the computer and take a look at them. Now, I did buy Reddit on the breakout right here, but I may add to it. I like how it's performing, and I certainly like the earnings per share growth. That was how I do tops up. I found, or tops down rather, I found three things that look interesting. What if I want to look at bottoms up? Go to the impulse, and I can do various scans, but you know what I'm going to. My A plus scan, the double momentum, which has been my best performer. Um, make sure all the filters are out. Okay, let's go back to A plus. The only one it has is IoT, which we've already identified as one that we like. Let me just make sure by doing this that there's nothing else that I filtered out. Yep. CRM, I'm going to put this on the one I like as well. Salesforce.com had good earnings, starting to see some dividends from their Agent Force AI tool. I like the fact that it took out the 200 to the negative point. After a run like this, you have to expect it to slow down a bit. Ignore high jump. It's been in a downtrend for a long time. FR is an industrial realty company, REIT. Beautiful uptrend. This one caught my eye. It's got the double momentum, good relative strength in OBV as well. And then the other of my favorite bottoms up scan is the A scan. And the A scan, which is going to look for stocks who are in an uptrend and a pullback and are breaking out with momentum or a breakout signal from a squeeze. The relative strength has to be good in OBV. So let's look at AVY. This one looked good. I just don't like the downtrend, although it's broken out of it. Here's your, happens to have no double momentum. It's 2 out of 3. But here it's coming out of a squeeze. And here's your relative strength over OBV is favorable. FR we just looked at. Genpact G, kind of gappy. GPCR, Structure Therapeutics. I love how it pulled back to the 50. I'd rather be owning LABU than a lot of these healthcare biotechs because it's hard to know all the news risk. But if you're going to play an individual name, that one looked interesting. And then the question, are we ready to go back into Moderna? Maybe. Let's look at a weekly, and you can see how far it's come down. Now, is it ready to run? I doubt it, but it could be. The most amazing thing, I actually shorted this stock at $500. Um, I top ticked it, but I was so chicken, I covered it, I think around 300. Should have never covered it and wrote it all the way down. But Moderna, it certainly has had a stellar career with the coronavirus. But will they be able to take all that money, invest it in other disease states like cancer, and have a showing? I might like. I'll go. I will put mRNA. Let's go back to my styming thing. So let's put mRNA. By the timing model, had a big breakout. All right, go back to the JS layout, which is where I do most of my work. Put back that A. PRAX. Don't know anything about this. Praxis Precision Medicine. I'll have to do some research. Then here's another one whose pattern I liked. RZLT, big uptrend, pull back to the 50 and a breakout. Relative strength up, OBV. Volume breakout momentum. So RZLT and FR would be the others that are going to make my top 6 or so. RZLT and FR. So RZLT and then FR. Am I looking for the best stocks in the market right now? No. Those stocks have probably already run. But I'm looking for stocks that seem to be ready to go higher. Um, Sometimes there's news or earnings. Sometimes there's another reason. I will be watching those stocks and the markets. I'll be reporting to you daily. Hope you have an outstanding week. And don't forget the Fed.